Today in the grain market, soybeans were higher. That U.S. demand is on the rise and starting to strengthen the market. We had a 44-cent range today, and I think that we're towards the high of the current 4-week channel. The 4-week channel just lets you know that we've been really moving sideways for quite a while. And we finally moved back to that $17 mark, which we were looking at for a long time. Now, the crush margins are good, especially in Illinois. That was reported today, and that should increase crushing production. Hence, that should give some support to the soybean complex as a whole. The option open interest, not really much activity, but there has been an increase in that $17 strike. And of course, we're here at $17, so that is no surprise. The CVOL for soybeans is at 25.5%, the oil is at 37%, and the meal's at 30.2%. All kind of like off their highs, but still relatively strong. Now, corn today was higher as well. That strong ethanol value really, kicked the market up a little bit. We're up towards that 765 mark with a 22-cent range today. It's pushing the market to aim towards that high of 182 and 3/4, which is really a stone's throw away from where we are now. The move is really has pushed us above that 25-day moving average. That indicates that the uptrend is still intact. So all those things coupled together, I think, is pretty supportive of the market. The option open interest, the active options show that the high volume was on the December $9 strike. I think that's something to be watching as we go forward. But overall, the December $8 strike has the highest at 25,231. I think that thing is going to come into play as we move through the next couple of months. The CVOL for corn is at 42.6%, which is still very, very high. The real story today was the wheat. Of course, we did get to limit up. The uncertainty about the global supplies is the issues. The futures did trade up 85 cents at one point before it backed off a little bit, but the concern really is about how we're going to get planting done in Ukraine. I believe that's going to also affect the corn market. So corn and wheat are going to be affected by this. The grains are all in their respective channels, but towards the high side, and it looks like we're trying to break out and threatening to move to the upside. The option open interest on the wheat, though, the most active was the May $12 calls, but I think the most interesting was the December $14 calls actually carries the most open interest at 6,400. That's going to be something to watch as we move down the road. The CVOL for wheat, even though that it's come down about 4.25%, it's still at 65.2%. That would have been a whopping number weeks ago, but that just becomes, just a everyday thing that the volatility in wheat is that high. The U.S. weather includes the issues that we have that the southern plains are still going to be dry. That's going to be worth watching as we get closer and closer to the acreage report here at the end of the month.